Hello traders, Gary Wagner here. It is 11 o'clock in Honolulu, 5 o'clock in New York on Thursday, 26th day of June 2025, and this is the evening report for gold and silver. The dollar experienced an unprecedented weakness this week, marking the lowest valuation against its major currency trading partners since February 2022. The dollar has lost value against the basket of currencies it trades against for the last 4 consecutive days. On Monday, the index opened at 98.65. This week, we saw the index trade to a low of 96.60, closing today at 96.94. When we look at this on a weekly basis, we can see that the dollar has lost 1.42% this week. However, dollar weakness did little to support falling gold prices, which declined by $46 on Monday and has remained under pressure throughout the trading week. Today, August gold declined by $2.90, currently fixed at $3,339.20. Since Monday, gold has remained below its simple 50-day moving average. Silver also declined at the beginning of the week, closing on Friday at $36.35 and then trading to a low of $35.53 on Tuesday. It has risen considerably over the last 2 trading days, trading to a high today just above $37 per ounce and settling just below that at $36.92.5. Gold has covered some vast upside ground this year alone, considering that right around January, when prices moved above the simple 50-day moving average, gold was trading at $2,760. It would rise above $3,500 on an intraday basis. However, the last 3 attempts to close effectively above $3,470 were unsuccessful, which is why we have current strong resistance at $3,470. In terms of our support levels, we have to acknowledge that $3,300 has provided support. What is different this week is that for the first time this year, gold prices have moved below the simple 50-day moving average. Truly, the range in gold has been contracting ever since the parabolic move that began on the 9th day of April, with gold at $3,000 up to the record highs just above $3,470. The fact that gold has stalled with definitive resistance at $3,470 and we have seen gold trade to a series of higher lows tells me that recent elevated prices are probably unsustainable. I would look to see if gold can hold $3,300 per ounce, which at this point I do not believe is highly likely, because even with recent dollar weakness, gold has been trending lower. On a technical basis, a break below $3,300 per ounce, basis the most active August contract, would signal a further decline to a minimum of $3,240, with major support not occurring till just below $3,200 at $3,160. That seems to be the most likely path that gold will take over the next couple of weeks. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next evening report. Bye-bye.